Okay, so now my next item that I want to do is I'm going to continue with the other payables, the utilities and the other expenses. So, let's go. I'll do utilities first. Have I got the right colour? Yep. So my utilities payable, we start with an opening balance of 25,500. And my closing balance is 28. Now what increases my payables is my, decreases my payables is my expenses. So I've got 55,000 here for expenses. So that makes, what does that make, 80 something or other? 80,500. So that must be cash paid, because that's what's going to reduce my payables. I've got 20, oh no, hang on, I haven't got that. I've got 80,500 minus 28,000. 52,500, and that's the cash in relation to my utilities. So I can tick off that utilities expense, I can tick off that insurance expense, I can tick off that cost of goods sold, I can tick off that sales revenue. Loss on the sale of equipment is non-cash, and my depreciation is non-cash as well. Although there is some disposal proceeds because I've made a loss. And now my last one is my other expenses, which would come under this other expenses payable. I'll slide that up. What do we got? We've got an opening balance of 12 and a closing balance of 82. What increases this? This would be my other expenses. 575. And my cash paid is what we're trying to work out. So, got 12,000 plus 211. Now we're taking out 82,500. 2, 3, 5, 75. So my cash paid is 141,075. And that's another cash paid. Alright, now I need to flip my pages. Oops. So you got that still? Okay, next one I'm going to, so I can tick off that. Now, let's have a quick look. It doesn't tell me any other information down here. It says interim dividends were 10,000. The original cost of the equipment was 180. The accumulated depreciation was 85. Okay, so we could rebuild my equipment account now to work out what my purchases were, because we know what my sales were. And we've got a non-cash amount here. Okay, so my land, it doesn't tell me anything about my land, so there's a difference between here and here. And I can just assume that that was purchasing, because it's told me nothing else. So I've got 1260 minus 8700. So I've got 390,000 worth of land. So that'll be a cash outflow in relation to investing activities. I don't have to worry about accumulated depreciation just yet. We're going to rebuild this account in a moment. My loan looks like it's gone up from 2013 to 2014, so there's no other information down here, so I can assume that we just borrowed some more money. Oop. Where's my clear? 45,500 equals 34,000, so I've got a change in my home loans of, not home loan, but just loan. So I can tick off that one, and I can tick off my loan. I can put my retained earnings changes down to my profit, plus my changes in dividends, and we could prove that if you wanted to. My share capital, looks like I've increased my share capital by 500,000, because it said ordinary shares were issued during the financial year, so we've issued some ordinary shares. We always get cash for that. No one pays for that on credit. There's 500,000, so there's that one ticked off. No changes at all to my reserves. So now let's go back to equipment. Okay. So my equipment. There's two things I need to do. One, work out what my disposal proceeds are. And what my purchases were, because I've purchased some equipment as well. So let's do my equipment account. Opening balance in my equipment was 740. That's my opening. My closing was 1100 million. I actually sold, because it tells me I sold $180,000 worth. So that's going to reduce my equipment. So what's that to? Here we go. 180 plus 1,100,000. Now I'm going to deduct my 740 opening balance. So that must means I purchased this piece of information down the bottom here. So my 180, and my purchases must be for cash. 5,400, and that goes into my cash flow statement. Now I'm going to try and calculate my disposal proceeds. Now it's telling me that I sold equipment for 180,000 that cost 180, and my accumulated depreciation on that equipment was 85,000. Tells me down here. So that gives me what we call a written down value of 95,000. Now there's this loss on the sale of equipment. So if I'm selling equipment that's valued at 95,000, I'm making a loss of 50,700. That must mean I sold that equipment. 95 minus 50,700. I must have sold it for 44,300. And this is my disposal proceeds. So I'm going to include that. So that's my disposal proceeds. So I've now almost targeted every area that I need to target. Everything should be ticked off here because that's a non-current. The only thing that's not ticked off is retained earnings. But we already know that out of my retained earnings was, oops, you can't see my pen, is this 10,500 here. So we're not given any profit figures, so we can't actually rebuild our retained earnings account. Okay. Cash flow statement. For Limited for year ending now. What we're looking for is operating activities. Cash from customers. Okay, my cash from customers is 2,041,940. 50 from here. Yeah, so I've ticked off my first one. Paid to suppliers. Now my amounts paid to my suppliers comes out of my accounts payable account. So I'm paying this one to my suppliers, 1,353,700. Now it's because it's paid, I'm going to bracket it to indicate outflow. Now, I'm going to look now for my other expenses, for operating expenses, let's call it what it is. Now I'm just going to put a little 3 here because it's made up of 3 numbers. It's my prepaid insurance, it's my accounts payable, hang on, I've done accounts payable, forgot to tick it. So it's my prepaid insurance, my utilities payable and my other expenses. So what I'm going to do is I'm going to add those up. So I've got 5,000 plus 52,500 plus 141,075 comes down at 198,575. And you don't have to do this, but just so you know when you're watching this back later, it's made up of 5,000 plus 52,500 plus 141,000. Oops, and that's right off the page. Okay? Now there's no other items I need to include in there. So, total operating activities. Let's try it. 2,041,950 minus 1,353,750. So 700, sorry. Minus 198. 489. 675. Investing activities. My investing activities now will be my equipment, and what else is it going to go in there? So I've got my equipment, and we're going to have a few here. We've got land. So purchase of land, equipment. Let's write it in the right way. 390. Now it's a purchase, it's an outflow. My equipment was 540. And that's an outflow as well. And disposal proceeds. My disposal proceeds is 44,300. And that's an inflow. 390 plus 540 less 44. 885,000, 885,700. Now that's an outflow, so I'm going to bracket that. Alright, might run out of page here. And my financing activities. So my financing activities now are all the other items. So I've got a loan here, 34,000. I'm going to scrunch this, 34,500. And that was inflow, because it's increased between here and here. Shares, or share proceeds, of 500,000. And the last thing is my dividends paid of 10,500. 10,500. And that was an outflow. So once again, if I add these up, I get 34,500 plus 500,000 less my 10,500. 10,500, yep. 5, 2, 4. So I got 524,000, which is a cash inflow. Now what I'm looking for is a total cash flow. So I'm going to add this number plus this number plus this number, well, in a certain way. 524, I've already got in there. I'm going to add in my 489,685 minus my 885,700. That gives me 127,975. So that's my net cash flow. Opening cash, where do I get my opening cash balance from? Yep, cash at bank, and my cash at bank figure is 58,200. And if I add my two numbers together down here, plus 58,200 gives me 186,175, and that'll be my closing cash. So my closing cash balance. And that should agree with my cash balance that's here, 186,175.